You're listening to the Tax Insights podcast, where the professionals at Hawkins Ash CPAs break down complex tax topics into bite-sized how-tos. Saving for retirement is essential, and it is important to maximize the funding of the retirement plan account available to you. In this episode, Jeff Dvorak, a tax partner, describes the various IRA, 401k, and SEP accounts available and the contribution limits associated with all.
There are some great ways to maximize retirement plan funding, depending on what type of retirement plans that you have available to you. So maybe let's talk about them, starting with the lowest, going all the way up to the highest.
All right, so my guess then is that an IRA would be at the lower end of the spectrum, correct?
Yeah, that's right. So this would be for those that really don't have a retirement plan at work, but still want to do something. The 2023 limits are $6,500 if you're over 50, then you can put in an additional $1,000. Now, an IRA may also be available as a nice add-on for other retirement plans, but you're going to really need to pay attention to those income limits because they may not allow this to be done.
So, all right, what about a simple IRA plan?
Yeah, many companies have set up simple IRA plans, and they work similar to a 401k, but employers like them because they tend to be easier to administer. So if your employer has a simple plan, the contribution limits are higher. Those limits are $15,500 that you can put away, plus an additional $3,500 if you're over 50. So in this case, if you're over 50, you're looking at somewhere around $19,000.
Okay, so then I would imagine the next one would be a 401k.
Yeah, and then there's their siblings, which is a 403b and a 457, which are available for nonprofit entities. And here's where the numbers jump. So the 2023 limits for 401ks and 403bs are $22,500. And once again, that catch-up, if you're 50 or older, is $7,500. So if you're 50 or older, you can put up to $30,000 a year into your retirement plan, which isn't too bad.
Right. So before we move on, there will be some changes to these limits, though, if I remember correctly.
Yeah. So with the Secure Act 2.0 that was just passed in Congress here, there's certain catch-up contribution limits that are going to increase. And if you have a simple plan, you're going to be able to put away $5,000 more than what we just talked about. And if you have a 401k or 403b plan, you're going to be able to put away an extra $10,000 above what we just talked about beginning in 2025. Now, unfortunately, this isn't going to be available for everybody. It's only available for those that in 2025 will be the ages of 60, 61, 62, or 63. So essentially just that 4-year age group. But if you're going to be in those ages in 2025, then start to plan now to be able to put that extra money away.
Right. The next one I would imagine will just be for business owners, correct?
Yeah. And we've talked about this one in the past, and it's called an SEP, or a simplified employee pension. This allows a business to contribute 25% of an employee or an employer's wages, or 20% of the net profits of a business to a retirement plan. The nice thing about this plan is that these contributions can be as much as $66,000. So a huge jump.
So is the SEP also available for employees?
Yeah, it is. But it needs to be funded by the employer. So with an SEP, whatever percentage is contributed to the owner's retirement plan, that same percentage must be given to all eligible employees. Now, this is the reason why you really only see these type of plans for businesses that don't have many employees.
Sure. So last question, are there plans that provide even more benefits then?
There's other pension type plans that provide much higher benefits. Now, these plans would be set up if you have a very profitable business, but be very careful because, these plans are ripe for fraud, and it's on the IRS radar. And since there's been a lot of abuse in this area, the IRS is really looking into this. So be careful before you kind of go above the SEP level.
Yeah. Jeff, good information every week here in Tax Insight. How do listeners connect with the team over at Hawkins Ash?
I would visit our website, Hawkins Ash CPAs, like us on Facebook, or you can even follow us on YouTube, where we have, other types of entity or other types of podcasts that do bite-sized tax tips.
Absolutely. Jeff, thank you for your time, my friend.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at HawkinsAshCPAs.com. Hawkins Ash CPAs. Part of your business, part of your life.